One of the most interesting that I ever heard from Warren Buffett is something like, I think I could manage 50% return a year if I manage only $1 million. No, I know I could. I guarantee that. So it is something that Warren Buffett says is 1999 interview for Business Week. So let's look through this article completely. If I was running 1 million today or 10 million for that matter, it be fully invested. Anyone who says that size does not matter, hurt investment firm is selling. The highest rates of return I ever achieved were in 1950s. I killed the Dow. I owe to see the numbers, but I was investing peanuts then. It's a huge structural advantage not to have a lot of money. I think I could make 50% a year on $1 million. No, I know I could. I guarantee that. So in this video we will talk about how Warren Buffett is managed to make a 50% return on his money if he manage only $1 million. For now, give me one favor and make one big smash of the like button and subscribe to this channel, because it is very much useful and very much free, because we're talking about here about investing, about money, about stock market. So without further ado, let's get into it. So it's very different right now in terms of how much money Warren Buffett managed. It's number around $100 billion. Berkshire Hathaway is his investing firm and worth over $500 billion, and Buffett is managing a lot of this money. But if Warren Buffett would manage only $1 million, it would be a completely different story. In fact, it would be a very different story that Buffett profit will be around 50% in a year. So in this video we will getting into different strategy that can give us a ridiculous percentage of winning. So later in this video we are talking about 5 strategy which will be how Warren Buffett is able to make that amount of profit on a year. So because Warren Buffett manages millions and billions of dollars, he has to look at very high priced stocks such as Amazon, such as Apple, such as Coca-Cola and others. And practically there is no point that Buffett invests just 1 million if he had hundreds of billions of dollars that he is managing. However, if Buffett invests only $1 million, he could invest in small companies such as I don't know, GoPro is some kind of mid-cap or small-cap company. So let's look at Warren Buffett's answer and what he answered to the question how he could manage such returns. There are little tiny areas, as I said in that Adam Smith interview a few years ago, where if you start with A and you go through and look at everything and look for small securities in your area of competence, where you can understand the business and occasionally find little arbitrage situation or little wrinkles here and there in the market. I think working with a very small sum, there is an opportunity that earn very high returns. So essentially what he said, the very first thing that you can do is choose the area that you are interested in. So you have to choose something like you are interesting, you are not boring about, and you will be able to put much hours to study some area. And it can be some industry such as artificial intelligence, semiconductor, gaming and others. So you pick the industry and you are working to become very informed to industry that you choose. So after you choose your favorite industry, you have a lot to look at all stock from industry. As you make our homework and look at the small and mid-cap stock in this industry, so you will be able to find a little tiny way or to find opportunity, and you will be able to make such a high return. But the key is to pick the industry that you understand and make your homework, make your study, essentially put very much hours to study some industry and to make a right choice. However, if I want to say that you have to be very careful and make a good investigating company that you think will be able to good deal, so you can eliminate the odds of failure. So that was strategy one of the late in this video. We'll look at the strategy that you can implement and will help you when you investing in stocks. So without further ado, let's go on the second strategy. So strategy number 2 is that you want to use strategy number 1, but look only to US small cap companies. Warren Buffett like these stocks because there is more money and as well more moving in these stocks. Also these stocks makes Warren Buffett very rich and one of the richest men in the world, and maybe perhaps this is the reason why he like US stocks so much. But there in some stock market are not trusted as US, so you will really trust in some news that companies pull on. So in China and some third world country that the news can be highly manipulated and you can't trust them. That is the maybe reason why Warren Buffett prefer only US stocks. But there is some country beside US that you can believe. A country like Canada, like Australia, like United Kingdom is country that are very transparent stock market, and they are very regulated in the terms of transparency of small caps and mid cap stocks. But Warren Buffett said that United States is the best place to earn 50% return on your investment. So that was all for second strategy, and we will going to third strategy of how to manage 1 million and make 50% return. So strategy number 3 is invest only when price of the stock is below intrinsic value. So that is the beauty when you look at the small cap stocks, because they are often so underrated and under analyzed. So people usually do not see the potential that some stock can bring. So before you are going to buy some stock, you have to know what is intrinsic value, and because of that we will have a quick look at some chart and how moving intrinsic value go and how is in depth for price of the stocks. So let's have a quick look on this chart. So as you can see, intrinsic value is very persistent, very continual, and they just go a little bit up. But market price of some stock is affected on some news, some bad earning, good earning, and something like that. So you have to do your homework and only buy stock when it is under the intrinsic value. So that was all for intrinsic value. There is a lot of books, a lot of things on internet. You can read, and you can become more educated about these things. So we are going to the fourth strategy on our list. So fourth strategy is be careful when others are greedy, and be greedy when others are very much careful. So there's the very famous things from Warren Buffett, and we will now discuss a little bit about them. So there are some situations when people are very excited, and some situations they are panic a lot. Warren Buffett does not care about some panic that lasts a short time, 2 weeks, 3 weeks, maybe months and something like that, because he is the long-term investor and he is looking only for good stocks with very good business model like Coca-Cola, and in long term that some stocks like that will always go up because it's very much good business model, and it's some industry that people will always need. People will always drink Coca-Cola, and it is something like will be hard to change. So that is the reason why Warren Buffett will hold Coca-Cola forever. He's part of company. And as your long-term investor, you have always to consider that business model of some company, of some stocks. Not only look for some quick quick profit with 1 or 2 days, because it's very much risky and you easily can lose 50%, not earn 50%. So that was all for fourth strategy, and we are going to our last strategy. So last is keep turning over pages. So at the end of the day, those who turn the most pages is the one who will probably pick the win, because they will analyze most stocks and in the whole bunch pick of in terms of investing. So it's something like Peter Lynch saying, then we will go through it. I've always said that if you look at 10 companies, you will find some of that is interesting. If you look at 20, you will find 2. If you look at hundreds, you will find 10. The person that turns over the most rocks win the game. Peter Lynch. So it's very simple. You have to put the time and become a successful investor. That is the true in all the business, and it's not strange in the stock market. So that was all for this video. To sum up some things, you have to be very careful when you go into such thing like investing in small cap stocks, because they can be very volatile in upside, but in the downside as well. Warren Buffett did not mention that you can easily lose 50% in some years. So you have to make your homework, make your study very much, and it will eliminate the odds to pick the wrong stocks. So that was all for this video. I hope you're enjoying. I encourage you to leave the comment below if you find something value in this video. Also give me one big smash on the like button, and also subscribe to this channel. And as always, I hope you're enjoying. I appreciate your time, and have a good rest of the day.